Welcome back, folks. Dow right now is up 329. We get the Nasdaq up 129. S&Ps are up 41. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday, folks, at 20 past the first hour. Don't forget, Steve has an outstanding show here every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, the Mastering Probability. Now, the way you get this newsletter, folks, you come to TFNN. You're going to go right under newsletters. You're going to see Mastering Probability right in the middle there. You hit that button, you can subscribe. You can subscribe for 1 month, 6 months, a year. They all come with a 30-day money-back guarantee. Absolutely nothing to lose and everything to gain. Steve Rhodes, what's going on?
Well, just recovering like you from the Thanksgiving holiday weekend.
Yeah, it was a beauty.
Yeah, great weather and too much food.
And lots a little of good bit of cooking, lots of good food, no doubt, man. I like it.
Lots of football. So, Tom, what I thought we could do today, for a few minutes, is talk about consolidation patterns. And the reason is because consolidations can be really tricky to trade. They can really be a pain in the butt for traders and investors out there because pretty much most of us don't like to wait. And in consolidation patterns, you've really got to wait it out. Most of us, we want things right now, but consolidations are absolutely all about waiting. For example, this, by the way, is a weekly chart for the Dow Jones Industrials.
Okay.
And what we can see here, if you take a look at the yellow rectangular box out there, it's all dashed lines. This takes us back between the time frame of 1975 to 1982. So the Dow, it was a nice wide box out here from about 750 to the 1,000 level. So it was a nice trading range, but it was consolidating for 7 years. In fact, even inside that consolidation, there was a smaller consolidation pattern that had formed, maybe similar to what we have going on. So here is an example of the Dow on a weekly basis that was consolidating for a long period of time. In 2004 and 2005, we can take a look at another consolidation. And really, this consolidation, for the most part, didn't really complete until 2006. Oftentimes, when you break above or below a consolidation area, typically you'll see price pull back, test that to prove whether the consolidation pattern is done. And really, we didn't see that take place inside the Dow until about 3 years, back until about July of 2006. And then price went ahead and took off and went to the upside into the highs of 2007 out there. If we take a look at where we're at now, this is a picture, Tom, of the Dow weekly basis. We're looking at a weekly chart out here. This way I can squeeze things in, and we can see that we are now in our third consolidation since the 2009 bottom. If we take a look at the first two consolidations, one was in essence formed by the flash crash back in 2010, 2011 out there. It lasted, or we didn't really break, or the Dow didn't really break out of it for about 82 weeks. 82 weeks. If we take a look at the second consolidation pattern, that takes us into the 2015, 2017 timeframe. That lasted for 77 weeks. So if we take a look at where we're at now, because it's very clear, we've seen the bottoms from February. They were tested into April. We've seen the high in January, and this is a weekly chart. It was tested in October of this year. So we're in a full-out blown consolidation in the Dow. It's possible, very possible. We're only week 44 into this consolidation pattern, and we can see since the bottom of 2009, they've lasted for 77 weeks, 82 weeks. It may not be until July 2019 that we're out of this consolidation. And I think it's really important for traders, investors to understand that out there. Now, it's always best to buy a consolidation at the bottom, and it's best to sell a consolidation up at the high. So we know that. So the question is, will the Dow test the bottom of its consolidation, which is 23,360? I think I know your answer to that, but for me, the answer is, well, let's take things one step at a time. We can take a look at this chart for the Dow. This is a weekly chart for the Dow as well. And the green horizontal lines, they represent the horizontal trading ranges. In essence, a tool that Bud Rolfs taught to you and I and everybody else out there. In fact, if you look down the very right-hand panel of my chart out there, you'll see the actual price for the Dow, and then you'll see a dash and a number next to it. And what we can see down here towards the bottom right, you'll see a level of 10,568.82. The Dow on a weekly basis, and this goes back further, so it goes back further on the left-hand side, has had 124 closings or opens at that price level. And that began the establishment of this trading range that formed. The next highest level of closes was down at 78.32.80. There were 47. So the way these horizontal trading ranges, folks, for you just listening out there, is you would take that dollar difference and you just simply add to the top and the bottom the different lines out there. Well, when you do that, because that goes back years ago where all those closes were taking place, of interest out here is how the Dow stopped up at the October high was basically at the top of that level. So the high in October of this year had nothing to do with forming these horizontal trading ranges, but price stayed within them. Well, on Friday, after Thanksgiving, the Dow pulled back, the market pulled back out there in the few hours of trading, but it stopped right at the bottom of that weekly horizontal trading range. So we've seen a bounce here today. The question is, will 24,248 hold? If 24,248, if we see a weekly close below that, remember I asked the question, will we go back and test the bottom of the consolidation, the 23,360 level? Then my answer would be yes. Otherwise, we've hit a decent, solid bottom. So that's the first level that folks need to be paying attention to. If we don't close below that, well, then we've got a bounce or maybe a move back to the prior swing point out there. Now, if we do move down to the bottom, what that also, the February lows, the April lows out here, if I just switch the time frames from a weekly set of horizontal trading ranges to the monthly, we can see at the 23,549 area, that's where price found some support. So that's a level of support where I would expect the Dow to hold. Now, of course, there's always a fly in the financial ointment. And that fly, there's really a couple of flies, is that when we take a look at the Dow consolidating in U.S. dollars, it's really important to understand how is the Dow trading on the screens of traders around the globe. Well, traders of the Dow in euros, traders of the Dow in pound sterling, we saw a break of their consolidation top inside the Dow, and all we've seen since then is coming back and testing it. Testing, retesting, rejecting that level and wanting to trade higher. So that's important because we've got maybe some traders in the U.S. that say, okay, I want short, but traders around the globe, those that trade in euros and pounds are saying not so fast out there. Another fly is that back on October 29th, the Dow formed a Rhodes momentum indicator bottom. Now, over the last quarter century, these signals have been really great bottoming signals. And the most recent one was October 29th. So if that low is not taken out, this tells us that what we're seeing today could last even further. So I'm not trying to confuse anyone. I'm just saying that we've got to take things one step at a time. And we've done that by identifying the bullish and the bearish case out here. So again, in summary, the bullish case says that if the October 29th bottom holds 24,122, then price can make its way all the way back to 26,081. The bearish case says, hey, we're only 57% of the way in on this consolidation. Be patient out there and look to buy the Dow at the bottom of that consolidation level. So one step at a time, that's what traders and I do. As far as what people should be looking for tomorrow, if you wake up and the Dow Equity Futures contract is trading about 24,749, a key level of resistance will have been taken out.
And listen, folks, you can come over to our website at TFNN, check out Steve's newsletter. You go to newsletters, you're going to go to Mastering Probability, and, of course, listen to him every trading day, 1 o'clock. Steve, you have a great one, safe one. We look forward to the show tomorrow.
Thanks, Tom.
Thank you. Stay